Hello, Friday, World Economic News, and we'll start with MISH. And Treasury spreads yield curve steepest on record. Explanation. The yield curve is government bonds being sold for different amounts of time. Now, they're actually called different things. They're bills and notes. They're not all called bonds, but for this we'll call them all bonds. So if you're selling a bond for 1 month, you only get a small amount of interest rate because there's not much risk there. There's no risk of default realistically, and there's not even much inflation risk. But as you go out on the yield curve, in other words going through 1 year, 2 years, 5 years, those risks increase, so you want more of an interest rate to lend to the US government. And as you get out to 30 years, obviously that's normally the biggest number because more risks are going to happen in 30 years, obviously. Certainly an inflation risk and maybe a default risk. So the yield curve goes out like that. Now it's shaped in different shapes, and that's why they call it a curve, because it's rarely ever a straight line. It's never a straight line. Now, this one is Treasury spreads yield curve steepest on record, meaning it's nailed down here bottom left and really goes straight up to the top right. But what Mish is getting at here is the differential between a low number like 2 years and a higher number like the 30 years. And if you draw the lines across, that gap, that spread between the two, is the highest it's ever been on record. Now, we can ask ourselves, Bernanke did actually say he wanted to get the interest rates down, and everyone thought that, well, that'd be the interest rates for mortgages, which are predicated on the 10-year, and he'd be wanting to get the high end, the long end of the curve down. But that would crush the spreads for the banks, and the banks are his little children, because the banks can borrow down at this end, short term, and just roll over that with the Fed borrowing it the equivalent of zero and rolling over those loans at zero, and lend out long on the curve and get the profit that is made from the spread between the zero and whatever they lend out at. So what we have here is Bernanke is either lied to us or didn't really know how QE2 would work. He said it'd bring those rates down, but it hasn't. Actually, the spreads are higher and better for the banks. But moving on, chart there will be on the website. FT Alphaville, the POMO flip. The Federal Reserve bought 7.72 billion worth of US Treasuries on Wednesday, and then it notes specifically what their CUSIP number was, exactly which numbers of which issue the Treasury bought, and they found that they were only sold into the market 1 week ago. In other words, the Treasury sell them out to the banks. The banks then 1 week later have sold it to the Federal Reserve. That is getting extremely close to direct monetization of the bonds. I think the Fed is doing this on purpose to try and bring down the credibility of the dollar. Moving on, Irish Independent. Sarkozy grandstanding on our corporation tax misses the point. This is Nicolas Sarkozy, the Frenchman, has said that the Irish should bring their corporation tax down because they're taking all sorts of European handout bailout money. Colin McCarthy, who wrote the article, says whatever funds we got from the EU are rapidly being funneled back to private European banks. And he says that Sarkozy should shut up. Well, I say Colin shouldn't shut up because it's a free world, but you've got to realise that the Irish have got themselves into a terrible fix. They are B. They have promised to pay money to A. Now, the government has promised to pay these bondholders, A, the banks, this money. So they're getting the money from C. So it's ridiculous for them to say to C, well, look, we're not keeping the money. It's not a bailout for us. We've got to give it to A. It doesn't wash at all. Unfortunately, Ireland have got themselves into a dreadful, dreadful, dreadful mess, which is only going to get an awful lot worse. And carping and moaning about it isn't going to help anybody. Reuters gives us new Merkel advisor says Greek debt needs rescheduling. and they are working on rescheduling the Greek debt. The Irish debt will come as well, so don't worry too much, Ireland. But the Greek debt, the way of rescheduling it, because they don't want to admit that, because a rescheduling is a default, they don't want to admit it. The system is so complicated that when I've worked it out and I've got it enough in my head that I can explain it to you in less than a minute, I will. But at time of going to press, it's only being floated, but it is so complicated, it's unbelievable. Bloomberg, Philippine bonds decline as 20-year debt sale fails and the peso falls. Philippine bonds dropped for a third day as the government failed to sell all of its 20-year debt at an auction today because investors demanded higher yields as inflation accelerates. There, in a nutshell, is what happens when the default risk, in this case inflation, comes into your bond sales. If you want to sell a bond for 5 years, it is a risk that inflation will come and eat into the interest that you're accepting on that bond. So you'll demand more if you think inflation comes in. And if you think default's a risk, like on Greek or Irish debt, you want an even more risk interest to take care of that. Business Standard, this is in India, FM asks states to remove levies to bring down food prices. The central government is telling the local governments to take off the taxes that they have on food so the prices can be kept down. India is very quickly going towards some various forms of price control for food to keep inflation down. Price controls never work, by the way. Finish with the Wall Street Journal and Moody's. UK should keep its AAA rating. London, the UK government's ambitious programme to pare back the budget deficit means the country should maintain its AAA credit rating despite the slower than expected economic growth forecasts, Moody's Investors Service Inc. said. What we have here is, I think we can even say, what happens is countries develop, and as they develop, they sell things to the outside world, and they get a reputation, like on eBay, for being good at trade. And then they make useful things, and they're reliable in trade, so a lot more people trade with them. And in the end, then the money of the responsible country becomes a product as good as a tractor. And it can trade its money as well as it can trade tractors. Now, what's happened to a lot of the Western countries is they've stopped doing tractors. It's just an example. And they're trading an awful lot more on their reputation. They are trading their money on their reputation. But the East is starting to see that the reputation of the Western money is falling. And this is what all of this is all about. You can almost forget the numerical values of all this. It's all psychological value and faith in countries, their bonds and their currency. And all of the fuss that's going on now can all be brought down to one word, and that's faith. And the Western world is running short. Well, the Eastern world thinks the Western world is running out of that faith. They're running out of faith in our ability to play the game nicely and efficiently like we always have. And without that faith, everything falls apart. Have a good weekend. Bye.